Hey traders, Jeff coming back to you from Full Throttle Traders. Welcome back. It is November 21st, 2024. Let me show you how we did today. Now, this is just the day trading portion of the day, which we typically start out for about 45 minutes, maybe 50 minutes in the morning. We day trade before we actually get into our actual official plays. We don't even track these trades that you're going to see here. We don't even count these trades, but they do quite well. Take a look at our two plays today with Microsoft and VST. All right, so again, 11:21, we traded Microsoft and VST on the day trade, just trading equities in the morning, just right when the market opened for about 30, 45 minutes before we moved into our diagonal spreads or options and our credit spreads. So take a look at how we did, and I'll break these down for you. You can see we made a couple $1,000s in a few minutes there, trading small risks, and I want to point that out because it's not about trading large risks. People that do this have 10-cent runs, they take this and they call it a day. It's not about that. You have a lot of loss. We do this very strategically. Watch how we actually put this together. If you look at Microsoft over here, the daily chart, and it was coming down. This is what I like to play off the bounce because Microsoft has an average daily range, typically about $7.49. You'll see that on the next slide. The actual wide range bar is coming in. So we knew the bottom was coming, right? It was coming into a demand area because where wide range bars go higher, it also leaves demand behind. This is within a nickel of each other. It comes down through the previous bar. This is the wide range bar, demand bar that we're looking at. Now look at the hourly chart, the 65-minute chart. When we drill down to here with myself, the members that was on our call on our trade today, we saw this bottom coming in. We started fishing for an entry at $10.70. You'll see the exact price points as I go through here. We knew a bounce was coming. So we entered in down here at $10.70 with a $1 stop. But the key is we didn't enter big. We entered with half the lot, half the shares. And then as things progress, we begin to add back to that position on the bounce. The key is finding the right entry point to keep it a tight stop and then adding on. At the end of the presentation, I'm going to show you a proprietary system that I developed and how to actually use the mechanics on how to take profits in these here. Stay with me. But again, we drilled down a 65-minute chart. We double bottomed in here, but it went a little further than here, about $1. We had to get down just into the demand area here. Remember, when wide range bars ignite, they leave demand behind. When wide range bars ignite down, or we call negative wide, they leave supply behind. So we were looking for a demand bar coming in here. Hourly chart was just profuse. I mean, there's nothing, it rarely goes this far. I knew this thing was going to bounce. I had a very high percentage of optimism this was going to bounce. Now, here's how we actually entered the trade. This is a 60-minute chart. Now, I knew Microsoft was near the end of the move based on its daily extension. Every stock has what we call an average day range. We know those ranges are a little more, a little less. The average trading range as of today on November 21st, 2024 on Microsoft is $7.49. At that point, we had moved $9.20, still approaching the demand area from the previous weeks. So we just basically fished down in here. We took an entry. I'll show the entry on a 5-minute chart, and I'll show you a couple of tricks in there as well. We knew the wide range bar was coming to an area. We knew we're at key support levels. We knew the average trading range was beyond by about 20%. 20, 25%. I start licking my chops. I know this thing is going to retain this, not just Microsoft, any stock or most stocks. The only thing left to do was to find an entry using a tight stop on the 2 and 5-minute charts. What do we do now? We simply drill down, and this is going back a few days ago, right? At that a couple of days ago on 11/20, 410.58 is that exact bottom. You can go back and look at that on your chart. We came right down to that demand area here. We took the bid at 410.70 here, and we did a dollar stop at 409.70. And it went probably 30 cents against us before the thing started kind of moving back up. Now, little secret, I'll show you on the next page here. I'll go ahead and show you now. When price of the stock moves away to where you can actually put a little gap in there, like a circle in there, away from the 9 EMA on the 5 in an extension pattern, price does not like to be far from that moving average. It will work its tail off to get right back up to that 9. We know that as professional traders at Full Throttle Traders. We know that. going back through. It's going to bounce. The question is, can we get the tight stop and ideally strategically try to find that bottom? And we did that. Take a look at this here as I move forward in this. Little secret, like I said, the 9 EMA doesn't like to be far away from price. And it wasn't far away from price at all, right? Right there, just drilled right into that top there. And we caught that was in 30 cents to the bottom area. Now, we did a little thing we called add in there. This is that proprietary spreadsheet that I put together. And as a member, as an annual member of Full Throttle Trades, you actually get this for free. This is years of coming up with calculations, variables based on standard deviations and things like that. And this is very accurate. So we ended at 470, had to stop at 490. We added at 411.20, okay? We came back in, we moved our stop up to protect that risk level, right? And we took 80% off at 411.73, and then on up the chain to work in. I use this proprietary profit data calculator to get the money, right? This is really key. And I've tweaked it over the years, but it's probably as good as it's ever been at this point. Now, as I move back down here a little bit, let me go back down to that one slide. Okay, here's where I left off. This was the actual part of the proprietary management tool that I used. Let's go down to the next one. I was thinking it was back at the top. This is the next trade. This is now for VST. This is a utility company. It runs quite a bit. Very, very high beta in this stock. And let me show you what we did on this stock to make the money. Well, first of all, this was on our gap list this morning. So this was gapping up. I signaled to the room, I said, this is actually a good play. Now, it's a pseudo 3-bar play, meaning that when they have the big wide range bar at nights after consolidation from the 8, hedge funds, big money, is more than likely behind the stock. We did stay a narrow range, no more than 30% penetration in the previous bar. Have a spinning top back over and still gapping up above when the market was even pulling back. Market was pulling back a good bit today. This was not. So this was on our high profile list. I wasn't going to take the breakout. I was waiting for the actual follow through. So let's take a look here. So first off, the thing is that the SPY was very weak. So this is what we call a relatively strong play, right? The market was weak. It was strong. Microsoft was weak. The market was weak. We played the extension bounce. Don't confuse those two. This is when the market was weak. We identified in our gap list of a stock that was not. The only truth that you have in the market is that the market telling you is that, hey, if the market's weak and this stock is not, there's some buying going on here. We should probably look at that a little bit more closely. And in fact, it was. As you see down in here, we bought half in here, we pulled back. We didn't take the breakout in here. Would it have worked? It probably would have worked. We wouldn't have made the same money on that. Very often I'll come in, I'll take a half lot breakout, and I'm out in 5 to 10 seconds. I did that yesterday on, I think it was Humana. But we'll take the breakout and get out. But what I like to do is take these pullbacks. So number one, we had a $7 move down in the SPY here in the first 30 minutes of the day. $7 move, that's huge. VIX was sporting around 16, 17 at that point in time. We had a stock that was moving up. It's a 3-bar play. Basically, this is how the pattern sets up when hedge funds, or at least smart money, big money, begins to see it. They want it. It didn't come without some shaky business in here. Look at this. So we bought a little bit right back at VWAP, coming into the 9 EMA on the 5-minute chart, and bought at 159. You can see my average entry was 159.40. Excuse me. And we bought the second piece once it cleared this bar at 159.75. So I was full lot at that point, moved my stop up in that point, and I ended up getting out right up in here at 162.38. My plan in my proprietary tracking system said we should be out at 165. I'll go back and show you. Well, you kind of saw that on the previous sheet. I don't have it all in there, but right about in here, I didn't trust this supply bar. I didn't trust the market would actually bounce at this time of day. You can see the time of day here was around 11 o'clock. At 11 o'clock, we were starting to come back up to a supply area. The market kept charging higher. So we decided to take it up just over the top of this topping tail. And it did pull back, put a red bar, take out the previous bar, but it did go higher. So we could have got more out of that, yes. But I wanted to play it safe. We had 2 dynamo trades in here. Again, if you do the risk on this level here, we had a 159 and we had a $1.50 stop. That puts me in a 166 share, and a 166 share was made 332. That's keeping it at a $500 risk. Remember, we're adding to the winners. We're not adding to losers, right? And if we don't get that one that does move back up the way that we kind of contrast and think that it will move up, we're only going to take less than a half our loss, or half our loss at max, all right? So in the last few days, we left about 6.12R. We're tracking 25R for the month in 4 days, just in the last 4 days, following this unique system. Now, again, this is just a small piece of what Full Throttle Traders does. We day trade in the morning, we trade credit spreads, we trade iron butterflies, we trade SPX spreads in the morning. And I start moving in and out. We were exiting out of some of our previous plays here this morning. That MU, we saw the short leg had the bounce, got out of the MU trade for a win. So we're getting out of trades, but we're beginning to kind of reposition ourselves in some diagonal spreads, in some calendar spreads, possibly, maybe even bull call spreads, or just maybe naked calls. And we're working our way back up those trees. And then as time goes on, we're beginning to kind of percolate that through. And then, of course, we do have a training every day at Tuesdays and Thursdays at 2:30. You can see here solid wins on these trades. It was really just paying attention, understanding what the market's given you, understanding what this stock was not doing in relation to the market, and finding your way through. Ultimately, we had a nice power win today. If you go back, this is 998.59. This is probably in about 20 minutes time. If you go back to the beginning of the presentation in here, you can see here, we pulled off about 2 bills, not counting some of the other ones here. We end up with about another 500-700 up. So, $2,500, $3,000 a day. And the cool part is it's very small risk. When you think about this, no more than that $250 risk going in to pull that kind of money, that's the key. But if you're going to do it that way, you have to be technically making sure you're looking at charts technically, not just throwing big money and hope it goes, right? We're doing small risk, but we're getting big gains because we're technically engaged in what these markets and what this stock should do. So I hope that was beneficial. We have a lot more. Every few days, I put 1 or 2 of these videos out. This is a great education. I've been trading for nearly 25 years full time. This is my profession. You can have trades $4,000 a day. This is really some of the key elements in consistent in those. You don't need to make that kind of money. You can start smaller and go larger. My screen's kind of acting up here, so I'm going to pause. Give me 1 second. As I mentioned, you don't need to make that kind of money every day, particularly when you're starting out. What you need to be is mechanically and technically smart. We use technicals for getting in. We use management and mechanical for getting out. My name is Jeff Yates. Take a look at my description for a free trial at our membership. Come in, take a look. You can get in the membership for very low cost. Take a free trial first and take a look at this. For every day that you wait, you are missing this outline of these trades every day. It literally is costing money. So do what you want. I hope this, nonetheless, just from education point, is absolutely beneficial to begin to kind of take some of these concepts and these ideas and begin to infiltrate this in maybe whatever you're using. I hope it helps in some way. But hopefully we'll see you in the room. Take care, guys. See you on the other side.